you announced that you're going to be starting within your company as well a Bitcoin Treasury.
Yep.
I'll get you to explain, first of all, what is that, and expand a little bit on why this strategy is the one that your company's going to take.
Yeah. So a Bitcoin Treasury business is a company that's going to acquire Bitcoin and hold it on their balance sheet and hold it for the long term. But not just acquire a small amount initially, it's to consistently keep on acquiring and growing their Bitcoin holding over time. And so at the beginning of this year, we announced to the market that we adopted this Bitcoin Treasury policy inside of our business. We actually acquired some Bitcoin in our business and now look to continue to keep on acquiring more Bitcoin on an ongoing basis. And so we'll use the equity to be able to raise more capital, to be able to deploy that into Bitcoin, but also think about using some debt to actually, a non-margin based debt to actually acquire more Bitcoin into the future and using the company's balance sheet to be able to do that.
And so why go into a Bitcoin Treasury? What's the opportunity that you're seeing? And obviously you're not the first person to do it. It's slightly becoming a more popular trend, but it's still not widespread. So,
Correct.
So what's the opportunity you're seeing there?
Yeah, so I've been holding Bitcoin since about 2017. And I think when I bought it initially, I had no idea really what I was buying other than, I thought this technology was quite interesting, something new, and get involved in it. As I've sort of evolved and held it for longer periods of time, and I've started to see what's happening in the economy around the world and currencies around the world, I've started to understand money a lot better. And so it comes back to this fundamental of what is money. Okay, the money that we have today is government issued money, and governments have the ability to keep on consistently issuing more and more of this money, and they can do that in unlimited demand. And so this all changed around sort of the 1970s when the gold standard was every dollar that you produced was backed by gold. They suddenly decided to remove that gold standard, and that enabled governments across the world to just keep on being able to create more and more money. And so why that's been negative for consumers or individuals is that it's devalued your currency. And so today when you're going to the shops, you're finding that everything's a lot more expensive than what it was a few years ago because the amount of money that was actually printed during the COVID period. And so you think about sort of what is the solution to that? Well, the solution to that is having some rules around how money actually works. And that's how Bitcoin was created initially. Bitcoin was created back in 2009 during the GFC period. And it was a base of rules based around, okay, well, here's what's happened to create the GFC. How do we stop that from actually happening? How do we create this new form of store of value? And that's exactly what Bitcoin has become over the years. And so I think we're in the best time now to be acquiring Bitcoin because a lot of the risk has been taken away. It's proven technology. It's been around for over 10 years. It's now been adopted by a lot of institutions across the world. And now companies are starting to adopt Bitcoin on their balance sheet in the future. And so as a store of value, I think acquiring Bitcoin today is going to be worth so much more than what it is today into the future.
And so you're setting up the Bitcoin Treasury, or you've set up the Bitcoin Treasury. Only Bitcoin, you're not going into any other crypto? Why is that?
Yeah, so essentially, I believe that Bitcoin is the best store of value into the future, and the way in which the rules are actually set up. Every different current cryptocurrency is set up in different ways. One of the key things around Bitcoin is the limited in supply. There's only 21 million in the way in which the algorithm actually works. And so the limit in supply is really critical. Other coins like Ethereum or others don't have those same sort of characteristics. And so I think that's really important. And also it's the adoption of institutions. Institutions are now adopting Bitcoin. Large amounts, there's ETFs available and large amounts are being purchased by both high net worths, but also individuals and also now corporations.
And you said it is becoming more a mainstream, for a lack of a better term.
Correct.
It is still a potentially volatile asset, though. Does that make you nervous when you see any changes in the price that happen quite dramatically?
Yeah, no. I think that sort of more leads to an opportunity. And, if you look back at any sort of 4-year cycle, no one's ever lost any money over that 4-year period. And so you definitely don't want to be buying Bitcoin and thinking, I'm going to trade this, I'm going to hold this for the next 6 months and make lots of money, because that's impossible to actually know. And so you're taking a long-term view of how of buying that Bitcoin and holding it for a minimum of a 4-year period. And so I think as long as you're taking a long-term view, then definitely then you're going to be okay with the volatility. And so for us as a company, it's about acquiring and holding for the long term. It's not doing any sort of trading strategy. It's not looking to sell at a point in time. It's holding and building a really strong balance sheet, but a balance sheet filled with Bitcoin.
And I'll move into the next topic because that'll segue quite nicely. You're listing on the NZX.
Yep.
I'll get you to explain a little bit more about that decision.
Yeah, so one of the so we're currently listed on the ASX, and so we're now transitioning to the NZX. And so one of the challenges that we had was on the ASX, it has a particular rule. It's called the cash box rule. And if a company holds more than 50% of their cash or cash alike, and Bitcoin being deemed as cash alike, they breach this particular rule. And so we came very close to that 50% rule, and then we realized that this is the interpretation that the ASX had. And so we had to look for an alternative. Either we had to stop buying Bitcoin and stop growing our cash reserves, or we needed to look for alternatives around the world. And so we went and looked at alternatives around the world, and we saw that the NZX obviously didn't have this particular rule, and was very open to sort of having a company being listed that's a Bitcoin Treasury business. And so, yeah, we started that process and look to be listed soon.
And I will ask the question because I'm sure there'll be investors out there that will want to know. If someone wants to buy shares in Locate Technologies, are they buying Bitcoin? Are they buying a technology company? What are they actually buying?
Yeah, so I think the answer to that question is probably going to evolve over time. Today you're buying a company that owns some Bitcoin. We have about 12 Bitcoin on our balance sheet. And we have a business that's doing about $6 million a year in revenue in AUD terms. And so you're buying a combination of a technology and Bitcoin business. In future, I imagine that our Bitcoin holdings is going to grow much, much faster than what our software business will grow in the short term. And so eventually, you could be looking at our company as a proxy for Bitcoin into the future.
I mean, is there a point where the Bitcoin becomes so valuable that it just makes sense to only focus on that and not the company itself?
I don't think so. I think for us, we're still very invested in building our software business. We've got a really great product. We want to keep that business continuing to grow, and we're seeing lots of growth occurring already inside of that business. And as that business becomes more profitable, we'll be deploying that excess cash into Bitcoin. And so I think anything that we can be doing to acquire as much Bitcoin as we possibly can in the short term is going to be really important.
Well, I'll ask the other question then. If someone was looking at buying stock knowing you've got this Bitcoin treasury, why would they not just go out and buy either Bitcoin directly or an ETF that holds Bitcoin?
So one of the advantages that a Bitcoin treasury business has is that you've got the ability to raise equity to buy more Bitcoin. But also you have the ability to then, once you've got a certain size of Bitcoin on your balance sheet, is that you can then start issuing a debt, and not doing any margin type debt. You're doing really safe debt, has long time windows for repayment, or potentially even just you're paying interest on that debt facility in the future. And so by being able to combine those two things together, that allows you to take a leverage position on Bitcoin, but a really safe leverage position. One of the worst things that you can be doing is take out a margin-based facility and loading up on lots of Bitcoin using margin type debt, and that's going to cause lots of problems for individuals. But a company has the ability to do this in a really safe way, and that can really maximize your Bitcoin growth into the future. And so, if you take the view that we take is that we think Bitcoin is going to be worth a lot more than it is today. The ability for us to acquire as much as we can and do that on a consistent basis is going to be really important. The other thing is for people to think about is, are there sort of tax advantages in owning a equity versus owning an ETF directly? And so I think there's things that people can look into to see, does that make sense for them from a tax point of view?